Hi everyone, Martin Bamford here, and this is your Money News Fix. 5 personal finance stories that are rocking the world of money this week. Everything you need to know in just a few minutes. Here we go. The Bank of England has voted to keep interest rates on hold at their record low of 0.1%. The bank's Monetary Policy Committee also voted to maintain its asset purchase programme of quantitative easing at current levels. Commenting on the outlook for the UK economy, the bank believes that rapid vaccination rollout progress will ensure a strong recovery later this year. While the UK economy is forecast to shrink by 4.2% in the first quarter due to national lockdown restrictions, it is expected to bounce back in the spring when consumer confidence returns. Bank of England Governor Andrew Bailey referred to the progress with the vaccination programme as excellent news and said, "We do think that it is going to support a sustained recovery throughout the rest of the year." While the Bank of England ruled out negative interest rates for now, it told banks and building societies that they remain a possibility for the future and they should prepare their systems accordingly. House price growth could be running out of steam, according to the latest house price survey from lender Halifax. Their latest survey shows average prices falling by 0.3% in January. That's the most significant monthly fall since last April. Despite the month-on-month fall in average house prices, they still rose by 5.4% in the past year. The average UK property is now worth £251,968. Russell Galley, Managing Director at Halifax, said, "How far and how deep any slowdown proves to be is a challenge to predict given the prevailing uncertainty created by the pandemic. With swathes of the economy still shuttered and joblessness continuing to edge higher, on the surface this points to slower market activity and downward price pressures in the near term." Energy regulator Ofgem is warning of rising gas and electricity prices for millions of households in April. According to the regulator, the price cap for default domestic energy deals will rise to cover the extra costs faced by suppliers. They reported that the average gas and electricity customer will pay an extra £96 a year, seeing their bill rise to £1,138. Jonathan Brearley, Ofgem Chief Executive, said energy bill increases are never welcome, especially as many households are struggling with the impact of the pandemic. "We have carefully scrutinised these changes to ensure that customers only pay a fair price for their energy." Brearley continued, "As the UK still faces challenges around COVID-19, during this exceptional time I expect suppliers to set their prices competitively, treat all customers fairly and ensure that any household in financial distress is given access to the support they need." Nearly a quarter of UK couples who got together in the past year or so have fast-tracked typical relationship milestones due to lockdown restrictions. The survey by money management app Hypejar and consumer website moneymagpie.com found that 22% of new couples have sped things up, including 21% who moved in together faster, 17% who got a dog or cat together, and 11% who decided to get married sooner. The research also found that 24% of couples agreed to share food and drink costs within the first month of their new relationship. Annie Thorpe, Money Magpie editor, said, "This spirit of the Blitz is taking over relationships in COVID UK, where what we're calling turbo coupled adults are chipping in more quickly, showing a real Dunkirk spirit when it comes to spending. Relationships are less about one person paying for another, as sharing everything from the start. This has to say something good about equality. Single parents in the UK are more likely than any other group to be living with problem debt." New research from charities Gingerbread and Step Change found that 82% of the UK's 2 million single parents face not having enough income to cover their living costs, forcing them to borrow money and get into debt. The research also found that the more hours single parents work, the more likely they are to use credit to pay for childcare costs. 25% of those single parents working full-time paid for childcare by using credit, compared to 17% of those working part-time. Victoria Benson, Chief Executive of Gingerbread, said, "Before the pandemic, around 70% of single parents were in work, but this didn't protect them or their children from poverty. It's shocking that in 2021 so many are forced to go hungry in order to repay debts built up as their income doesn't even cover basic living costs." That was your Money News Fix. Thank you for watching. Don't forget to like, share, comment and subscribe. I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.